Welcome to our channel, where we talk about the most recent developments and trends in the financial and investment industries. We'll be discussing Tesla's possible stock buyback program in today's video. This is a subject that analysts and investors have been talking about a lot lately. Could Tesla's decision impact the course of the company's finances and performance going forward? Stay put to discover out. Before we get into more specifics, a lot of experts and investors are keen to see if the corporation will implement this plan. Don't forget to hit the subscribe and like buttons on our channel. Since the primary EV stock has been volatile for a while, the company may benefit greatly from a stock repurchase at this moment. Investors have been talking more and more about Tesla's IDF stock repurchase program in recent months, notably after the company's third-quarter results call, despite the fact that it recently revealed what many consider to be subpar Q4 data. Elon Musk, the CEO of Tesla, and other company officials were under tremendous pressure to act about the company's stock swings from investors and analysts. It is important to note that Tesla has the ability to repurchase between $5 and $10 billion even if 2023 proves to be a difficult year for the firm. The board has discussed the repurchase concept in great detail and, for the most part, feels that it makes sense to proceed with one, but we want to make sure that the procedure is followed precisely. Tesla's CEO Elon Musk also hinted that the company will probably carry out some significant buybacks, but keep in mind that these are still subject to board approval and evaluation. Over the past few months, a number of experts in Tesla have discussed the potential advantages of a stock buyback for the company. Elon Musk has commented that, while market teams tend to focus on the short term, it's crucial to focus on the long term. To put it another way, picture a busy marketplace where companies are vendors selling their shares. Occasionally, a company may decide to buy back some of its shares, effectively becoming a buyer in the marketplace. This can have a number of advantages, such as supporting stock price by lowering the number of outstanding shares. When a company buys back its shares, it effectively reduces the number of shareholders and can sell validating ownership. This can support the stock price and give shareholders more confidence. A buyback can also increase earnings per share and increase the value of the remaining shares. As a result, the corporation may have more influence over its future because fewer opinions will be taken into account when formulating strategic plans. In a bursting marketplace, the advantages of being a savvy shopper are greater than those of being a buybacker. In addition to optimizing your spending, combining your ownership, maximizing the value of what you're doing, and even lowering your tax burden, it makes sense that so many businesses decide to repurchase their stock. How therefore can we maximize a buyback? For us investors, knowing the details of a stock repurchase can be helpful for a number of reasons. The ability to time the market is the first justification. Repurchases may be a sign of a company's perception of the state of the market. A corporation may indicate that it believes its stock is cheap and is optimistic in its future prospects by announcing a repurchase. On the other hand, a corporation may be signaling that it thinks the stock is overpriced and that the market is perhaps in a bubble if it stops or scales back buybacks. When Elon began selling his personal Tesla shares in the middle of 2022, the stock of the company plummeted for just this reason. The effect it has on the stock price is the second reason. Repurchases may have a favorable or negative effect on the stock price of the company. A company's stock price may rise if it buys back a sizable portion of its shares, which may lower the number of shares on the market and raise earnings per share. This is fantastic news because Tesla reported profits after the market closed in Q4, and the company's earnings per share showed strong performance. The maker of electric vehicles outperformed forecasts in terms of revenue and earnings. Shares of Tesla increased by 5% following the company's recent declaration that it might produce 2 million cars this year. Refinitiv reports that adjusted earnings of $1.19 per share beat the predicted $1.13 per share after hours of trading on the day of the announcement. In addition, compared to the same quarter last year, revenue for the period was $24.32 billion, greater than the projected $24.16 billion from refinancing. After accounting for the August 2022 stock split, Tesla's adjusted earnings per share came to $2.52, or $0.85, on revenue of $17.72 billion. Due to regulatory credits, the company's Q4 automotive revenue of $21.3 billion represented a 33-year rise of $467 million. Following the announcement of the quarterly delivery report, the company's shares fell down 6% on Monday in just the first week of April 2023. Some investors are concerned that further cuts may be required to boost sales, which could reduce profits over the weekend. With a total production of 448,808 vehicles, Tesla said that it delivered a record-breaking 422,875 electric vehicles in the first quarter of this year. Even if deliveries have increased by 4% from the previous quarter, some investors remain uneasy about Tesla's ongoing price reductions in the U.S. Some of the U.S. price reductions, as explained by China and Europe, were made to enable Tesla and its customers to benefit from tax credits granted by the Inflation Reduction Act. Nevertheless, there is a persistent worry that as more competitors enter the market, Tesla will have to keep slashing prices to draw in customers. Due to these worries, some investors have called for Tesla to announce a $15 billion stock buyback, as we covered in the previous video. According to billionaire Leo Codwin, who claims to be the company's third-largest individual shareholder, the company should fund the buyback with free cash flow and not deplete its current $18 billion cash reserves, in a tweet to Martin Vieja, Senior Director of Investor Relations at Tesla. In addition, Kogan said that when capital expenditures are taken into account, Tesla's free cash flow, which was $2.2 billion in the first quarter of this year, should increase to $8 billion this year and $17 billion the following year. Hebrew thinks Tesla can buy back its cheap stock in addition to investing in new factories, and its fully autonomous Optimus bot investors believe that now was the ideal moment for Tesla to undertake a repurchase due to the company's recent price improvements. It is important to comprehend the timing and effects of a stock buyback on Tesla stock, since it can help investors make decisions about investments and offer insights into the company's financial situation and future performance. According to YouTuber Dave Lee, a buyback of Tesla shares is possible because the corporation could create 10 million cars a year at a profit of $15,000 each. In contrast to traditional automakers like General Motors and Ford Motors, which were forced to close numerous factories due to the global chip shortage, there is good reason to believe that Tesla is now poised to give them a run for their money. Lee discussed how the company would be able to compete with established automakers. Despite the industry-wide crisis, Tesla sold nearly twice as many cars in a year as it did the previous year, setting records every quarter. The wider ramifications stem from Tesla's capacity to acquire essential components. Beyond its yearly car sales figures, which indicate that the company and other up-and-coming electric vehicle companies could represent a more immediate and formidable threat to the dominance of industry heavyweights like Volkswagen and General Motors, Tesla's total valuation will be $5.4 trillion if it manages to generate an operating profit of $150 billion with a 30x multiple from investors. This is in line with the expectations of the majority of industry executives and policymakers. For most investors, Dave Lee says, buying Tesla shares would be a smart move. The third-largest stakeholder in the firm, Leo Colgan, has been pushing for a share buyback for a number of months, and a petition has been launched asking Tesla to return a portion of its shares. With about 5,300 signatures by the end of November, the petition was doing well. It called for a buyback of Tesla by the end of 2022, following the EV company's challenging year brought on by Elon Musk's acquisition of Twitter. One of the 5,000 petition signatories claimed he was compelled to turn dark and short Tesla shares in order to preserve his wealth. Before he moves forward once more, he feels that the board should carry out a repurchase or something like. According to Bush analyst Dave Ives, activist investors may put more pressure on Tesla and Elon Musk in 2023. Even while Tesla had significant growth in 2022, its stock price fell by 50%, which made it a target for activists. For supporters of Tesla who are optimistic about the long-term prospects of this incredible firm, this news is significant. Please remember to subscribe, use the like button, and keep viewing our other content if you like this video.